We'll just take a quick detour, from Fatafat and talk about a result reaction. Bank of Baroda delivered its third quarter numbers. Here, Sanjiv Chadha, MD and CEO, talking about what were the factors that affected the bank in the third quarter.
So, to my mind, if we were to look at in terms of the broader environment and whatever information had been put out, I would guess the quarter would have been largely on expected lines.
Okay.
We had informed the stock exchanges that there was a divergence which was there in terms of the RBI's assessment of our non-performing assets, and therefore it was really on the cards that divergence would play out in terms of slippages, as also in terms of loan provisioning, which it did. So if you would look at the slippages of about 10,000 odd crores, which was there, we have had an average slippage numbers about 6,000 crores for each of the preceding quarters going back 3 or 4 quarters. And if you were to subtract the impact of the divergence, we were pretty much there.
Okay.
So I don't think it was something which was unanticipated or extraordinary. We would of course have preferred it to be far lesser. But to my mind, it was largely in line with trends. If you look at, again, the other figures, we also have to evaluate it in the context of the fact that the bank has been undergoing a merger process. I think in that particular context, and also the slowdown which we see in the economy, I would believe, again, the results would be largely as per industry growth rates and in line with what you would expect. For instance, again, you had the net interest income growing by about 9%. The CASA ratio rebounded, moved up YOY about 180 basis points. The retail loan growth was 15%. So the deposit growth, of course, was in aggregation lower, but that was largely on account of the fact that a large quantum of bulk deposits, which were high cost, were paid down, which therefore depresses the overall growth number. But the CASA growth rate has been reasonably all right. So I would not say that it was a stellar quarter by any reckoning, but I think it was by and large in line with what you would expect in terms of the previous disclosures and the broader economy.
So talking about your slippages, about 4,500 is from the divergences that were picked up by the RBI. But as far as that code, the 6,000 is concerned, if you could give us an understanding of where these fresh slippages are coming in from, segments accounts, and also do you see this further expanding in the next quarter, or do you think this is the level that you're seeing going forward as well?
So I think the stress has been coming from the sectors which we are all aware of, which means EPC contractors, some NBFCs. So in this particular quarter, there was one large NBFC exposure which was recognized as being stressed.
Okay.
But again, going ahead, if you look at our NBFC portfolio, for instance, about 90% of the portfolio is rated A and better.
Okay.
Out of that, 85% is rated AA and better. So I would believe that going ahead, we should see slippages coming off as compared to previous quarters. As we discussed, we had seen numbers about 6,000 crores each quarter for the last year or so.